In the Cape Town studio with me is Brian Kantor, who is Chief Strategist at Investec Wealth Investments. We're here to talk about a young and vibrant, I suppose, and potential population, a population in Africa that it displays a lot of potential. We were speaking a few days ago about the fact that maybe education is holding that back, but notwithstanding that, there's an enormous potential on the African continent with the demographics that we're seeing emerge. Completely the opposite, of course, to the Western world. Places like Japan, Brian, for example, welcome to the show. I mean, if the difference between Japan, for example, and certain African countries is extraordinary.
Yes. Well, one thing is assured of Africa and sub-Saharan Africa, which we focus on, is population growth. That population growth should mean income growth, if things go well. It's not assured. I mean, one of the benefits of income growth actually is population growth. More people survive as incomes improve, and then habits change and family size declines when incomes are seen to have risen. But Africa looks very promising, both because the population is growing and the labor force is growing even faster, and incomes are expected to grow. So the market is growing. In fact, a key document in all this was a report put out by McKinsey. It's called Lions on the Move, the Progress and Potential of African Economies. That came out in 2008 and was circulated widely amongst the boardrooms of the world, and said, you've got to get involved.
As a long-term investor, which your institution is,
Yes.
Do you pay enough attention to demographics and to population pyramids and that sort of thing? Because I think as a long-term investor, if you can get that right, then it is the key to long-term returns.
Yes, well, one notices South African businesses are businesses we're investing, seeking growth successfully outside South Africa. And one hopes and believes that they have particular capabilities of growing profitably in Africa. And they're doing so. So we watch those companies very closely. The sort of African expansion success stories are going to be very important.
Of course, it is a double-edged sword, though, Brian. If there's a vast youthful population, but is ill-educated or undereducated and therefore can't find jobs, or growth slows for whatever reason it is, then there is the potential for social unrest and mischief making.
Yes.
And that, of course, then holds the continent back.
Yes, well, that's it. Population growth provides opportunity. That's what it does. If people can be well employed and well managed, and government behaves itself, then economic growth follows. But it's not something you take for granted.
No.
One point though is worth noticing: if sub-Saharan Africa doesn't do well and the population grows, they'll be looking south for jobs. We're talking about sort of 300 million more workers in sub-Saharan Africa. And we've had migration from Africa towards the better living standards to be had in South Africa. We could expect more of that.
Yeah, although that's a sort of paradox, because I mean the South
Yes.
African growth rate compared even to the Madagascan GDP growth rate is actually very poor. So it's almost as though South Africans should be looking north of here.
Yes, but we don't really know how many people are working here. I mean, how many Zimbabweans, for example, have found work in South Africa? They've certainly had an impact on wages, as well as on employment. We're waiting for the census. Maybe the census will tell us more. We don't know the size of the economy outside of the formal economy. We need to understand that. But my sense is that the inflow of workers from Zimbabwe and elsewhere in Africa has influenced employment and wage levels, though maybe it's not always well established facts. But that is it's again. I mean, it's presumably helpful to business to have a rapidly growing labor force. If business were to be encouraged to employ, and people are looking for work, but as you as was well explained earlier, we put all sorts of barriers in the way of formal employment in South Africa.
Yeah, let's not get onto that. Let's get on to the importance of a youthful population.
Yeah, something I think encouraging, and one perhaps needs a bit of encouragement. The IMF put out its World Economic Outlook, and it's reduced its growth forecast almost everywhere.
To 3.3% globally, I think.
Globally, but not in sub-Saharan Africa. And to quote them, sub-Saharan Africa is expected to continue growing strongly in the near term, with regional differences in prospects reflecting in part economies' varying exposure to external shocks. And it says economic activity in sub-Saharan Africa has expanded by more than 5% in each of the past 3 years, continuing a decade-long run of strong performance. So, sub-Saharan Africa actually is doing very well, off a low base.
It is off a low base, of course.
And South Africa is part of sub-Saharan
Africa. And tell me about the youthful population story, because in China, China has been growing now for 30 years, ever since they freed up their economy. But they are predicted, for example, to have an aging population, and then India will take over from there. How long does it take for a youthful population to increase GDP growth, and therefore, after GDP growth goes up and wealth levels go up, then families become smaller and the population starts to age, doesn't it?
That's right. So that's one of the consequences of economic success, where your family size declines because children happily become consumption rather than investment. They're not expected to look after you in old age.
There was that famous case. There was that famous case in India, Brian. I think it was 2 or 3 decades ago, where they were trying to reduce the size of Indian families, and they put up a poster where there was one side of the poster was a family with 6 or 7 children and a small a pot of rice or something, and looking rather bedraggled, and then there was another side of the poster where they had a family with only 2 or 3 children and plentiful food and looking more prosperous. And the attitude was at the time, look at those poor people with only 2 to 3 children.
Well, China dealt with that quite brutally, and maybe they wouldn't want to be quite so brutal. The single child policy is pretty brutal stuff, particularly when it means abortion of girls and encouragement of boys, which is what happened. Actually, this picture out of the McKinsey report is quite striking. The workforce in Africa by 2040 will be larger than in India, China, where the workforce is declining, and obviously more than Southeast Asia or Latin America, and in Japan. I mean, that's your example of the problems caused by a declining population and an increasingly aging population. So ideally you want lots of young workers earning incomes, paying taxes, and supporting a relatively small adult population.
Are you confident that that can happen in sub-Saharan Africa, given what you're seeing from the IMF and from your own studies?
Well, yes, I think it doesn't. Economic growth is not so difficult to achieve.
So why are we failing so badly?
Because listening to you, I came to one conclusion listening to your previous a discussion of the inconsistencies in South African economic policy. The one hand doesn't know what the other hand's doing, and there's nobody directing to remove those inconsistencies. Not enough respect for business. I mean, you say, what business decides what people are worth paying. There's not enough respect for business in the higher ranks of South African bureaucracy. And if you have respect for business and you recognize the role of government is just enabling, then you'll get economic growth out of the pursuit of self-interest encouraged and constrained by competition. But we in South Africa, or at least the elite in South Africa, the new elite, doesn't seem to understand that. And business works in South Africa, and government works rather badly. Look at our public enterprises, how badly they perform.